Chartbusters, the show where we highlight all the buzzing stocks of the day, get you expert advice on how to capitalize and trade on those stocks. But a bad start for the markets as we speak. The Nifty now down more than 300 points from the highs that we saw on budget day of around 11,982. We're at the low point of the day. The Sensex now almost 1,000 points lower from Friday's high as well. What is worse is the advanced decline ratio, where there are 4 stocks in the red for 1 in the green. First up, all the top stories, and then we get cracking on an important interview this morning. Market sees further sell-off after weakness on budget day. The Sensex and the Nifty fall over 1% each. Weak global cues further dampen sentiment. The mid-caps, they underperform. Yes Bank reverses morning weakness, trades 7% higher, all off the lows of the day after the company denies malicious rumors with respect to management stability. Says the company's financial position is sound and stable, and the liquidity and operating performance continue to be robust. DHFL, that stock's in the green today. CNBC-TV18 learns from sources that SBI Cap is working on a draft resolution plan which includes part restructuring, part debt conversion and additional funding. Mindtree falls almost 12% today as the market worries about management stability after the company's top brass CEO Rostov Ravanan, Executive Chairman KK Natarajan and COO NS Parthasarathy resign. Additionally, the stock also goes ex-dividend by 25 rupees apiece. And L&T is among the top Nifty losers today after Bank of America Merrill Lynch downgrades the stock to neutral with a target of 1,719 rupees apiece. Says the company priced for mid-cycle recovery and the scope is limited for any positive surprise. All right, with that, we focus on the big interview this morning, the big CNBC TV18 exclusive. Yes Bank's MD and CEO Ravneet Gill joins us in the studio now. And along with me, Lata is staying on from Bazaar to take us through the interview.
Thank you very much, Mangalam. And Ravneet, thank you very much for dropping in.
To be here.
Well, first up, the release that you have put on the exchange, can you give us more color on what exactly you want to demolish in terms of investor fears?
So I think there were a couple of points, Lata, which we wanted to effectively address. Over a period of time, we've seen that, in the social media, plus general speculation in the media has been building up with respect to Yes Bank. And what is disappointing is that, it focuses on a lot of areas which are of little relevance and certainly of no substance. So the talk around, management stability, talk around, what's happening with credit, what happens with respect to the future revenue trajectory of the bank, etc. Very much unfounded. And we thought that this will pass over a period of time, but obviously that hasn't happened. That's not been the case. So we thought we should come out there and put it out into the clear in terms of the fact that these are completely unfounded, completely baseless, and very clearly seem to indicate an effort, a concerted effort to try and cause a little bit of instability. I think the point that needs to get recognized by the broader community is that at the end of the day, banks happen to be institutions of public trust, and I think the narrative and the discourse and all the discussion that happens around them has to have a sense of responsibility, given the implications that these can potentially have. And I hope that the market recognizes that, and we will have a lot more factual based information coming out rather than this baseless speculation.
Oh, absolutely. Why don't you say it clear? You are here for the long haul. The speculation was also around you, actually.
So I did see some of that in terms of what my future plans were. As far as I'm concerned, unequivocally, my future is with Yes Bank. I'm here to stay, try and do my best, and give it my best. Absolutely remain unwavering in my commitment to the bank. And the 4 months that I spent with the institution have, if anything, motivated me to do even better than what I had thought out right at the start. Okay,
now let me come to the other bits of news that debt which you had to convert to equity, Vadraj Cements, Everready, and I think there were 3 companies where you had to convert debt to equity. Now, your book also has been reducing or constrained from growth for various reasons because you are cleaning up. Will you not hit capital market exposure limits?
No, I think we haven't got to anywhere close to that where this becomes is a concern. I think one of the issues that we often talk about is that banks in India hold collateral, but they don't eventually end up exercising collateral. I think this is a very clear signal from the bank that we will be out there on the front foot. We'd like to be very supportive of clients, but where we think that the bank needs to take action to protect its interest, we will do that unequivocally.
Just some bookkeeping details. What exactly was your absolute exposure to these accounts, and at what price did you take them as collateral? Because Everready is down 63% from the peak.
Yeah, so again, I think clearly this is confidential client information that we have, so very difficult to talk about individual exposures. But I would say that these exposures are well managed.
So how do you plan to monetize stake in Bhadraj Cements unlisted and Everready? It's price damage because of the price damage.
So clearly we are working with other banks who are there in as part of the lender group of these companies, as well as the management of these companies. And I think by and large we do find that managements tend to be very constructive, very supportive. So I think the intention would be to find solutions which are reached collectively.
Okay. Well, let me come to capital. I thought you told me that you will raise capital by June.
I think if you remember our last interview, I certainly remember that, Lata. You had said that, do you think by July, August, September you will have capital? And I said that, we are working towards that. And, we are very much firmly on that course.
Okay, that's where, I wanted to ask whether you're facing problems because of the fall in the stock price. Now, the market cap is something like, 23,000 crore, if I'm not mistaken, because of the recent fall in the stock price. I'll just get that number. Now, okay.
Put some facts to the table. The day you were announced, the appointment of your announcement came in. The stock price was 215 rupees. On March 1, when you did take charge, it was 236 rupees. Now, as we speak, it's around 92, 93 rupees. So it's more than half from there. You'll have to dilute more.
No, what I meant is, see, if you have got 23,000 crore as the market cap, if you have to raise 10%, you will get only 2,300 crore. If you're able to, and RBI will not allow, the rules don't allow one fund to take more than 10, if that, then that means you have to get two funds at least to get even 5,000 crore. What are your capital needs? Isn't it much more? The brokerage are estimating close to 10,000 crore.
No, so brokerages can estimate whatever they like, and they will err on the side of caution, or create a situation or paint a picture which is a little more alarming. I don't think it's anywhere close to that. And again, look, Lata, at the end of the day, we have multiple options. It's not just going down one path. It could be a mix of public and private, whereby we could solve for a larger amount. All of that is very much on track. And we have enough flexibility and more to be able to solve for our capital needs, some of it organically and then some of it through other measures as well.
Okay. Well, what is the plan then? Would you want 5,000 crore? Have you thought out a number?
No, it's something that is still currently in the works, and we will determine that number and then come out with that to the market very quickly.
Can you give us some idea now of when we will be able to get the news on the capital?
So, like you rightly said, that we would want a little bit of stability in the stock. We would like to see a little bit of positive momentum on the stock. Once we have that, I think our plans, we will be in a much clearer position to be able to articulate to the market.
Okay. So, your NII growth obviously for the quarter gone by was constrained. It fell. So, do you think that will be the situation for the next couple of quarters? The one that ends on June 30th and the next, simply because growth is not fundable.
So I think if you see the NII point that you made with respect to the fourth quarter, I think the headline number also was on account of the the contingency provisioning that we took, and as a result of which we could not recognize the underlying income. But I don't think that remains a trend going forward. Okay. We actually feel quite confident and upbeat about our NII and overall revenue growth.
You've declared about 10,000 crore in terms of stressed assets. I'm not sure whether that includes your exposure to groups like ADAG, some real estate groups, and housing finance companies as well. So this 10,000 crore of stressed assets that you've recognized, is that a line in the sand, or there could be more? So
I would just once again provide that clarification. What we had said was that there was a 10,000 crore watch list out there, not a 10,000 crore stress book.
Okay.
But the exposures which could have been a cause for concern, or where we saw inherent weakness, are fully captured in that the watch list that we put out.
That includes the ADAGs and DHFLs of the world.
So whichever account where we thought that there was some potential weakness, and where we could potentially see issues with respect to servicing, were captured as part of that watch list.
No, the Radius Group now is the fresh point of problem. What exactly is your total exposure to real estate, and how much of that is in that 10,000 crore?
So I think even your channel I think created or carried the news that
Yes.
the interest was not serviced, and of course subsequently the retraction came based on what the feedback that we provided as well as what the borrower provided. So interest was serviced as of 30th June. It did not become overdue as it was reported.
Okay.
On the channel.
No, we clearly said, news report said 45 days, and
Yes.
even then it is not an NPA.
Yes.
And then we waited for Radius Group to give us a reaction as much as we could before we...
So we came back very quickly as well, saying that the interest was serviced before the quarter end. In some of these cases, as far as the exposure is concerned, first of all, from a value perspective, is very manageable. Second is, in some of these cases also, the underlying projects are very good. It's just a question of being able to provide some incremental financing for them to be able to complete the projects. But we believe that from the exposure that you specifically mentioned, we'll come out of it whole. We see absolutely no concerns with regard to that.
Okay, so just to forget that number, out of that 10,000 crore watch list, how much would be real estate? And what is your total real estate exposure?
I would say that roughly about 20% of that watch list, roughly about 20% would have been real estate.
Okay. Ravneet, what exactly are you expecting out of that 10,000 crore? It's a watch list, as you said. So, the market is treating that as stress list and an inadequate stress list. How much might be, irretrievable?
So I think, again, Lata, at the cost of repetition, we could have just put out a number out there which was the sub-investment grade. We need not have put out a watch list. I think we put out a watch list clearly on a very proactive basis, going out to the market and telling them that where did we see potential weaknesses, potential slippages. And the interesting thing is that a lot of that has still not slipped. So it was what we were trying to do was to be more proactive, be more transparent with the market, and come out there in advance and flag this watch list. We could have just given out a sub-investment grade list, which we typically do at the end of each quarter, and left it at that. And again, I would say that I do hope and expect that the market would start to recognize this as a watch list rather than as a stress list.
Okay. So your overall real estate exposure was what you said? 20% of the 10,000 crore is.
So these were real estate exposures where we thought that there could be potential slippages.
As against the overall exposure?
So our overall exposure, if you see, is given at the end of each quarter. It's there on the website as well. But just because that number is, let's say, X, does not mean that all of that needs to get captured into this list, because we think a lot of those exposures are in very good state.
Okay. The exposure to ADAG Group, you all had said at some of your investor conferences is around 13,000 crores. Can you all say which companies? I'm not asking you more than that in terms of client detail.
So first and foremost, to the best of my knowledge, we've never talked about what the exposure as far as the group is concerned. But in terms of where that exposure is, I think it's in some of the better companies. Okay. And like I've always mentioned, that one, we find the management of the company very constructive in terms of its resolution, and secondly, I think we are well collateralized.
Oh, well collateralized.
Yes.
Okay. So can you give us some idea of what has been the deposit growth this quarter?
I think given all the negative news flow, it has been a tougher ask. Having said that, I think the focus that we now have on the liabilities business is absolutely unprecedented. So the number of clients that we are onboarding, the diffusion with respect to the whole retail depositor section has been significant. And from an overall performance perspective also, I think what needs to be taken into account is the industry awards that we have won in this quarter. And they've been across. I mean, they've been through trade finance, they've been in terms of our technology piece, they have come in some of the infrastructure deals we've done around utility, around the renewable space, and these are international recognitions. So I think somewhere we also need to now shift the narrative to how robust is the operating performance of Yes Bank and how well is the bank competing in this space.
Okay, where are you going to surprise us positively in the results?
Across the board, I would hope to say, think.
All right. You had something else?
I think just one final question on the quantum of money you're looking to raise. I will re-ask Lata's question.
Yeah, so give us a little bit of time on that. And again, what I would go ahead and say is that all of this that we are looking to raise is really growth capital.
Okay. Oh, very good to hear that.
Yes,
Ravneet
absolutely.
Gill, Pleasure having you with us. Thank you very much for joining us and giving us
Thank you.
details on a range of issues,
Pleasure being
including,
here.
of course, management stability.
Thank you.
Pull up the Yes Bank stock, up about 5.4%. We'll take a break, and Chartbusters will now concentrate on what it always concentrates on, trading ideas.